We were welcomed back from our 4th of July holiday with a nice rally from the markets. We actually saw a number of our indexes flip back to a bullish posture after today's moves. I do want to focus in our trade application on one area of the market that had been given up for dead last year but is showing some serious signs of life here recently. So with that, let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's July 5th. 2018. If you're new to these sessions, we do want to say thank you for checking them out. We hope you come back. Remember, you can subscribe to our YouTube channel. You can also give us a thumbs up if you appreciate them and leave us comments if you please as well. We're also on Twitter, so if you want to follow me, my handle is @BrandonVanZee, all one word. The Market Scholars handle is @market_scholars. And if you get value out of these videos, we would encourage you to click like and retweet if you want us to continue to do them in the future. In addition to Twitter, we're also on Facebook. Make sure you jot down that web address you see in the logo in front of you. That'll take you to our group where we also discuss a lot of market-related content. So with that, let's go ahead and dig into the markets here. As you can see, I've got the S&P 500 pulled up in front of us. And as I mentioned before, we had a significant rally here today. We were up about 0.86% here today. That was 23 points to the upside on the S&P 500. Now notice we flipped back to a bullish posture. Now before we get too excited about it, it is only a weekly bullish posture, but it is good to see some resilience there from the bulls. It's been kind of a strange set of days here recently where we went from bullish to bearish back to bullish, just like that. Now remember, we're still below a somewhat falling moving average. That's why that moving average line itself right there is red. So it was good to see a nice healthy rebound day today. It was also very nice to see that we closed at near the highs of the session, but we still got a little bit of work to do to get back and over that moving average. When we look at the Russell 2000 here in a moment, you will see that that one did get up and over the moving average. So notice down below where that brings us with the posture setting tool that we use down here called the market forecast indicator. In particular, we're looking at this green line that is our intermediate term posture setter. And when that is pointing up like it is right now, in between 20 and 50, we do consider that bullish. So let's go ahead and take a peek here at our other four indices. I do want to show you what I mentioned a moment ago with the Russell 2000. That's the one down here in the lower right-hand corner. And notice the surge in the Russell 2000. Russell 2000 was up 1.15% today. That's a very healthy move. And so we closed basically at the highs of the session on the small cap index. And of course, we flip back to a bullish posture there as well. But what it has going for it is it's now above a moving average as well. Remember, S&P 500 still a little bit below it. The NASDAQ is still just a touch below it. And the Dow Jones is quite a bit below its moving average. So really, the Russell 2000 is kind of the leading index within the United States right now. That small cap space has been hurt less from all these potential trade war talks that have been consuming the news media here recently. So things are good from the small cap perspective there as of today. Let's go ahead and take a look at our next chart, which will be chart 4C for those of you following along at home. And this is our three green arrows chart. Now on this one, not a lot to report other than we are starting to give some of those three red arrow signals away. So notice that in the most recent week or so, we have had a lot of three red arrow signals, but as it stands right now, we really only have one left, and that is the Dow Jones that I'm pointing at right here. Notice that we actually have two green arrows on the Russell 2000, price action on the moving average up here, and then the stochastics also with the green arrow. Look at how close that MACD is. I had an excellent discussion about the MACD and the stochastics in my question and answer session today, which actually was ending up being about 4 hours long. So for those of you that are premium market scholars subscribers, make sure you check that out if you want to hear that conversation and more. But we also have the NASDAQ over here with a green arrow on the stochastics. And then the S&P 500 does have a green arrow on the stochastics as well. So in most of these cases, we have a mix of green and red arrows. The lone exception is the Dow that remains on that three red arrow trajectory. All right, let's take a look here now at our longer term chart, and this will be chart 4D. And this is our 1040 crossover method chart. Again, today's rally across the board did help in a number of cases. Most of these, of course, are weekly candles, but most of these candles are near the highs of their week as it stands right now. And so that'll help bail out the Dow Jones, give them a little bit more time. Remember, we've all been waiting to see if this orange line is going to cross down and below this blue line. If that does occur, that background color of the chart will turn pink for the very first time since over 2 years ago. And so it's been a long time since we've had a bearish posture on a longer term perspective, but the Dow Jones is in some dire straits from that perspective. We're getting very close to it. So today's rally did help kind of bail it out. The other indices are doing just fine. In particular, again, the Russell 2000 looks like it's destined to maybe hit another all-time high here if things keep up at the pace that it was on here today. So things for the most part are holding up reasonably well, at least in the U.S. markets. Of course, we've talked about what's been going on with some of the foreign markets lately. That's been a little bit more of a difficult ride. Let's take a look at some of our 12 grids now. And so we'll start with our Intermarket Analysis 12 grid. And as this loads up here, a reminder that the green background colored charts are bullish postures using that intermediate term line, and the red background colored charts are bearish postures using that intermediate term line. And so as we stand here and look at these various charts, what I typically like to look for are strong trends and or significant reversals. And one of the strong trends that we've been talking about here recently is preferred stocks. And that's not an area that we typically get too excited about talking about, but it just goes to show you that there's a time and a place for everything. So right now, preferred stocks are making a move. Now this is through the ETF PFF. So remember, you can of course buy individual preferred stocks if you want, but this is kind of the proxy from an ETF perspective of how that entire asset class is doing. So preferred stocks are doing real well. I'm going to show you the interest rate environment here now, and you can see that interest rates were a little bit cool today, but they have been falling for the most part for the last, let's call it month or month and a half or so. Of course, that has helped the Treasury market go higher as well. So notice the U.S. government long bond prices are going up. So bonds are going up, yields are going down. Of course, when we have that type of an environment, we typically have preferred stocks doing well as well. Now, one of the things that is a little bit peculiar about this time around is the foreign bond market. And that's why we include this on here, because every so often it will give us a different shape than the U.S. Bond market, and that is the case right now. A lot of that has to do with what's going on with the currencies. There's also a little bit more concern around the world about some of the economic growth around the world in comparison to the United States. You'll notice down below the U.S. dollar remains fairly strong. It was down today, but it remains above a rising moving average. But you will notice the background color of that chart down there is now pink, so we have a bearish posture. But considering the fact that price is still above that rising moving average, I don't think I'd make too much out of that at this current time. We are starting to make a little bit of a move out of gold here. Now, gold has gotten so sold off here. We've started to receive some of these oversold cluster signals right here. And so sometimes we will get those reversions to the mean. Now, even if we do get a little bit of a snapback rally in gold here, we'll want to be cautious with how we approach that, just simply because from the last 3 months perspective, we remain in a trend of lower highs and lower lows. You'll notice over here crude oil is looking a little bit toppy. We'll see where it takes us, but crude oil was down 1.38% today after making a really aggressive move for the last couple of weeks. So maybe just taking a little bit of time off right there. The VIX was down about 7% today. So as markets rally, we should assume the VIX would struggle, and that is indeed what is taking place. Let's now take a peek at our next 12 grid. This case will be the foreign markets 12 grid. And I want to show you here a couple of charts that have really struggled up until recently. And that's the first one I wanted to show you here was South Africa. Notice that South Africa now has a bullish posture using the intermediate term line. It's at 31 and rising, so that is a bullish posture. But you can see that we do still have this significant trend of lower highs and lower lows. And so this is what I had mentioned a couple weeks ago, that if we do get some sort of a big rally back to the moving average on South Africa and it looks like it might fail, that might actually be a good bearish or shorting opportunity for some of you that are willing to go in that direction. And so that is maybe where we stand right now. Now, South Africa was up 1.45% today, but you'll notice we did close near the lows of the session on today's candle. And with us being just on the underside of that falling moving average right there, that could make a little bit of sense. You can see the last time we touched the moving average right here would have been a great time to short this product. Same thing goes from back here and back here. So we do have a history in the last 3 months of touching that moving average or thereabouts and then failing it around those levels. So this could be an interesting time to take a peek at a bearish trade on EZA if you're comfortable with that. Other areas of interest, Mexico had really been getting beat up here recently, but you'll notice that it spent more time forming a bottom here as opposed to South Africa. Mexico's really been in a bottoming process here since mid-May, and now it's been working on that bottom to the upside. So now it looks like it wants to resolve itself up. That was a huge day for Mexico. 4.77 to the upside. So maybe some opportunities for those of you that like your reversal trades to take a peek of the action there. Of course, you do see that green background color telling us that the posture on Mexico is a little bit more bullish right now. Otherwise, it's kind of a mixed bag out there when it comes to the various markets. Like I mentioned before, U.S. markets have seemed a little bit more resilient than what we've been seeing in some of the foreign markets out there. You can see India is down about 6% over the last 3 months. China is down about 10% over the last 3 months. So those are some of the uglier places to be in the emerging markets right now. Let's take a look back in the United States at the sector look from a 12 grid perspective. And that's chart 4G for those of you that are following along at home. And you'll see, as I mentioned before, the S&P 500 in the upper left does have that bullish posture again. But as far as the individual sectors, it's more of a mixed bag. You can see that financials, industrials, materials, and energy remain with a bearish posture. The others have switched to bullish. Now, one that I wanted to kind of highlight here in this particular segment is down below here in real estate. Now, this is an area that we have been talking a little bit more about recently, but I don't get the sense that a lot of the rest of the investing community is talking a lot about it. Now, there's always somebody talking about this sector or the other, but it just doesn't seem to me like the real estate sector is getting a lot of press right now, and it really deserves it. I mean, you look at that chart, it's a good-looking chart right here. Of course, at the beginning of the year, things didn't look so hot because the interest rate environment was really causing some pressures in real estate and utilities. But I'll tell you what, this thing is cooking right now. As long as you don't expect interest rates to spike in coming months, real estate could have some interest for those of you that are more of the trend trader variety. In fact, that was one of the things I shared with you the last time I was on with you here. Let me go over to the internet briefly. And remember, you can access my sector selector for this first time only on our blog over at marketscholars.com. And on this post, and this was posted on June 30th, I'll be creating another one this weekend that would be only available for those of you that are premium market scholars. But as of last week's ranking, one of the things that we pointed out here as we look at real estate, that's the one with the blue pegs right here that I'm showing you that are kind of sticking out a little bit more here, so that way it's a little bit easier for you to see their pathway to their current relative outperformance levels. And you can see that real estate was really kind of in the lower half of the ranking system out of the 11 different sectors as recently as really May 18th. It was the third to worst at that point, but then it really started to kick it up a notch here and really started to get going about 2 or 3 weeks ago. In fact, a couple weeks ago, it ended up in the #1 slot as far as my ranking systems go. It did pull back to #2 last week, but after today's move, I wouldn't be surprised at all if when I run my rankings again as of tomorrow night's close, that real estate could very well be popped back up into the #1 slot with this week's ranking. So this isn't new news for us by any means. It has been kind of kicking up here for a few weeks now. But again, I haven't heard a lot of people talking about those real estate stocks, in particular those REITs that make up that particular area. So I thought we would focus our trade application example on that particular space here. We'll do that in just a minute. I did want to bring up one more chart while we were on the charts here. Let's take a peek at the yield curve. I had a good question in my question and answer session here earlier today, that one I mentioned before that was 4 hours long. You can check that out on our website. Remember, we always post our recordings on our events calendar on the day that they were held. That's assuming that you are one of our premium subscribers. But anyway, remember that the yield curve continues to flatten. And so we're eagerly anticipating whether we're going to be hitting this zero line here or not. But even if we do, David and I have always reminded you that if we do get an inverted yield curve, it can often lead to some economic duress, which can lead to a bear market in stocks. But it doesn't have to do it immediately. And we have to remember back to 2006, 2007 when we started getting that inverted yield curve down here where the blue line came down below the pink line, where all of those different maturities up here on the treasuries were bunched up together. But it really wasn't until a couple of years later when the market started really falling apart to the downside. So yes, it's important to be aware of that because it can affect various asset classes out there. But if we do get to an inverted status here, don't necessarily assume that that means sell everything in your portfolio, right? There's always reasons why there could be room for investments in your portfolio. So just be aware we continue to flatten on the yield curve, and we'll keep you posted if we do get to an inverted status at some point in the coming weeks and months. All right, let's go ahead and take a quick peek here at the sectors as well. I'm going to take a look at, let's go with the sector ETFs here. And then I want to stack rank by performance. Today alone, we did have a nice snapback rally from technology, up 1.4%. So that was the area I focused on a couple days ago. I said that was kind of showing some signs of weakness. So it was good to see that one snap back. I think the trade that we did on that was a bearish trade on Baidu. Baidu itself was still down, so maybe still playing into that China theme a little bit more. But US-based technology stocks did bounce pretty strongly here today, up 1.4%. The only downside mover was energy. It was barely down by 0.11%. So if we went in, take a look at a couple of those areas to see where the strength was coming from, we do see Qorvo, Skyworks, Qualcomm, Xilinx, and Advanced Micro Devices all up over 3%. Now notice in the industry column over here, all 5 of those technology stocks are in the semiconductors area as well. We then had Facebook after that, and then Seagate, and then a whole bunch more semiconductors. So this was the day of the semiconductor out there. And I believe you can track that through ticker symbol SMH as well. So let me just take a quick peek at that over here on chart 4A. There we go. This is the Van Eck Vectors Semiconductor ETF. And notice it was up 2.7% today. And that's not a small ETF, by the way. There's hundreds of semiconductor companies out there. So it's good to see such a broad rally in that area. And you can almost get a sense just visually with your eye that it's attempting some sort of a bottoming process here. And that would help the overall markets. There's a lot of influence within the semiconductor space with your big names like Intel and Qualcomm and so on and so forth. All right, let's take a peek at the worst performers within the energy patch here today, since they were our laggards from a sector perspective. And on the downside, we did have HollyFrontier down 2.5%. We had Marathon down 2.6%, and FTI down 2% here today. All right, so let's now talk about our trade application example. I'm going to come back over here to the charts, and I want to pull up ticker symbol EXR. So this is one of the stocks that we have been concentrated on a little bit more in my top-down trend trading class. In fact, we've been kind of looking at that one. We've been looking at public storage and LSI. This is life storage. But as you look at all 3 of those charts, I mean, they're off to the races. And these are all real estate investment trusts. This is back to that real estate theme that I identified a moment ago on the charts. I mean, real estate is hot. Not a lot of people are talking about it. If we look at VNQ, this is your Vanguard real estate ETF. It's hitting new 3-month price highs here. And that's a pretty strong looking chart, for all intents and purposes. So anyway, the stock that I thought we would place a trade on today for our trade application example is on Extra Space Storage. It's actually a local company out here in Utah where I live. And you can see it's done a really good job of staying away from that moving average. Ever since it decided it wanted to bottom over here, it kind of bottomed around 85 on these 2 different moves over here. One in mid-April and then again at the end of April. And then it decided to kick it into high gear. And it's really been in a fairly consistent move since then. What I like about it is that it hasn't come with a tremendous amount of volatility either. You'll notice over here we were just below 96 at the high level. When it came back down, it was around 91.5 or so. When it went on its big move right here, it basically flatlined. It didn't really even go down. Even right here where it kind of topped out at about 99, the worst it got down to is about 96. And then we've had this most recent move here where it went from about 102 down here to about 98 or so. And so you can see that this thing, when it has pulled back, it generally has not pulled back by more than $5 per share. So what I thought we would do today is just a straight stock trade on this one as opposed to the options trades. I know sometimes we hear from you guys that you don't want us to do so many options trades. And I will remind you that for those of you that are premium members of Market Scholars, I do teach 2 classes throughout the week, one on Mondays for top-down trend trading and another on Tuesdays for dividend growth investing that are exclusively stock-only trades. So for those of you that don't want your options trading, I would invite you into those classes as well. But on this one, I thought what we would do, just since we recognize that pattern of higher highs and higher lows, and clearly this is a stock that does have a bullish posture right now, as you can see by that background color green. We also have that nice green moving average telling us that price is above a rising moving average. Have a nice hold signal here, or a close above the high of the low day, as some will call it. And so we will do a trend trade on this with a $5 trail stop. Since we recognize that this stock really hasn't pulled back by more than $5 when it has its typical movement. So we'll see if we can try to take advantage of that. Let's go over here to the trade tab. Actually, you know what? I'll do it right here from the chart. Right click on the chart, and then I'll go to buy custom with stop. That loads up down below. Obviously, position size to whatever is best for your situation. We'll just do 100 here in this account. And we will try to buy this tomorrow at whatever the closing price is today. So 100.67 is where it looks like it closed here today. And we will, on the second line where it says stop, I want to click that stop in the pink right there and go to trail stop instead. I am going to change right to the right of trail stop where it says day, change that to good till cancel. And then on this final line down here, you can click this plus and minus sign. Actually, you know what? I'm going to put this. I'm so used to putting it in as a percentage order. I usually click that a couple times. You can actually just leave it at plus and minus there, because we're just going to put it in as a straight dollar amount in this case. So I'm just going to type in $5 there. Now, as long as I've done that right, it should be a $5 trail stop. We'll find out here in just a minute. So let me go to confirm and send. And yes, it says mark -5 right there in the order confirmation dialog box. Now, for those of you that are not familiar with trail stops, basically what's going to happen is this stop will continue to trail the highest price up after the trade is filled by $5. So if it goes up to $105 from where it's at right now at 100.67, then your trail stop would eventually go up to $100, which is $5 minus or 105 minus $5. If it went up to 110, then your trail stop would go up to 105 and so on. So it'll continue to trail it up, but it will stop if the price of the security goes lower. So trail stops are designed to only go up, and then they will flatline if that stock stops going up. So that's kind of the idea behind it. It's a little bit less maintenance when you're dealing with trail stops there. So with that, let's go ahead and send that one in, and we'll see how we do that tomorrow. All right, well, I want to thank you for joining me here tonight. I'll actually be with you again tomorrow. David's got a little bit of time off, well-deserved after a very big weekend that he had last week doing a lot of web development and other things for our company. So I'll be back with you here tomorrow on the Market Outlook video as well. As always, if you get value out of these videos, we would encourage you to click the thumbs up on YouTube and also give us a like and a retweet on Twitter if you wouldn't mind as well. So with that, I'll wish you all the best with your trades and your investments, and we'll see you tomorrow. Take care. Bye-bye.